People really don't know what their expenses will be because they don't know how long that they're going to live.
Americans are worried they won't have enough saved for retirement now more than ever.
Retirement is going to cost, for many folks, over $1 million.
Is no sure thing in investing, but a lot of people think that annuities may come close to that.
It's going to more safe things that they know. If they know they're going to need that money to supplement their retirement, well, then you can't play that risk.
This is the Safe Money and Retirement Show with Jon Heischman Sr., founder and partner of Heischman Financial Services, serving the Columbus and surrounding areas. Jon specializes in educating pre-retirees and retirees about safe money strategies and ideas. Now, it's the Safe Money and Retirement Show. Here's Jon Heischman Sr.
Good morning. I'm Jon Heischman, your host of the Safe Money and Retirement Show. Our office is in Reynoldsburg, Heischman Financial Services, 888-426-0177, which is the number to call. I'd like to hear from you about your questions and concerns, or maybe there's a particular topic that's on your mind that would be a good fit for my radio show. 888-426-0177. I'd like to start the show out talking about steps to enhance your financial literacy. It's a skill that may help play a central role in achieving financial well-being. Yet, some individuals, they struggle to effectively manage their finances. Without the knowledge to make informed decisions, it's going to become challenging to prepare for emergencies, save for future goals, or a secure, comfortable retirement. This applies to pre-retirees and retirees. One of the biggest problems with retirees, they don't have what I call financial wellness. It goes hand in hand with financial literacy. What does that mean? It is how money works, how to manage personal finances, including budgeting, savings, managing debt, investing, and retirement planning. So by understanding key financial concepts, it's often easier to build better money habits. It also reduces stress, improve financial stability, and work towards goals with confidence. What I've seen as financial knowledge grows, individuals may be able to avoid costly mistakes, gain greater control over their money, and feel empowered to build wealth and secure their future financial situation. Here's some topics that I always want to address working with clients, because I'm going to help determine their level of financial literacy. Do you know how to create a budget? Many do, but I have to say the majority don't. So I want to step in, help them establish a budget. That has to be the first step. Next is going to be, what about your debt situation? If you have debt, are you actively trying to reduce your debt? We want to address this because if you're going into retirement, or if you're retired, you don't want debt. Debt takes away from spending, cash flow, and, of course, retirement income. What about your emergency fund? This is so important. It's imperative that there is backup money for an emergency, because too many people don't have an emergency fund, and they take money in the form of withdrawals from their retirement accounts. First of all, there's a tax situation. Secondly, retirement accounts are not bank accounts. The goal is to create money, build wealth, because that's going to be your retirement income. Never take a withdrawal, let's say from your IRA account, to pay for a new roof. It happens. And the reason is they don't have an emergency fund. Backup money, savings, forget about the rate of return. An emergency fund is not an investment. It's an emergency fund. What about insurance options that are available that can protect not only your finances and investment, but your retirement accounts? And do you know how investment works? Many do. I'd say the majority don't. That's why you need an investment advisor. Heischman Financial can help as an independent advisor to make sure your investments are working for you based on your risk tolerance, goals, and objectives. And is there a retirement savings plan? There should be, but again, many don't, and they approach retirement and they're playing catch up. But if they were doing the previous points that I mentioned, they would be able to contribute and have a retirement savings plan. So I want to look at all of these put together to better gauge your level of financial literacy. Review where you are now. Identify areas for improvements and determine which steps can get you headed in the right direction. And again, even if you're retired, this system is going to help you. Many times it's a simple tweak, a change, or adjustment that can make a big difference. So if you're not sure or want a second opinion, if we have a discussion or a meeting, there is no obligation, there's no sales, and of course, there's no cost. 888-426-0177. That number again, 888-426-0177. As you learn about financial literacy, mastering key principles will help boost financial well-being. It's important to gain a strong understanding of essential financial concepts. Not only helps to make managing daily financial decisions easier, but also lays the groundwork for planning for the future and achieving financial goals. Believe me, I've seen it work, and I have met with potential clients that are already mastering these key points. And I have to say it's very refreshing. Let me touch on budgeting. It's the first step, as I mentioned. It's critical because you're going to track income and expenses, being a key tool for money management. A monthly budget will help each individual understand how income is spent. It's also going to allow them to allocate funds towards savings. That emergency fund I talked about, debt reduction, and other financial principles. It's an easy way to track spending. Spot places where expenses could be scaled back if needed. So knowing where your money is going and directing it where it needs to go, it's a big initial step towards financial literacy. I don't know how to advise a client on reducing debt, establishing an emergency fund, and set up a retirement plan if there isn't a budget. And it's amazing the amount of money you can find extra by doing a budget and sticking to it. Because once that is established, then we can work towards managing your debt if you have debt. Maybe there's still a mortgage. Most people will have credit cards, possibly an auto loan, maybe a college loan that you're paying for your kids. We need to identify effective strategies for becoming debt-free, especially going into retirement. And it might even be a strategy of transferring credit card debt to a lower interest rate, allowing you to pay off that credit card or cards in a 3-year period. Interest rates, loan terms, repayment strategies will help to avoid costly mistakes and prevent debt from crawling too high. And that's so important because credit card debt is currently at an all-time high, and those that have credit card debt need to get into a position where they only charge the necessities and be in a position where that credit card debt can be paid off each month in full when you receive the bill. For most of my listeners, this isn't anything new. You've heard it before, but why do so many people procrastinate and put off these basic and important financial planning strategies? But it does happen. I understand. And that's why I want to help those that need advice. I'd like to hear from you. So call me at 888-426-0177. 888-426-0177. Stay tuned. I'll be right back.
Life expectancy is at all-time highs, so that means you've got a future to plan for at any age. If you have longevity in your family tree, then you need financial education from someone with the experience and knowledge to guide you into and through your retirement years. Jon Heischman and the folks at Heischman Financial Services are committed to helping you achieve your retirement goals with a low-key and trustworthy approach. Call Heischman Financial Services today to get started on your retirement future. Call 1-888-426-0177. That's 1-888-426-0177. Heischman Financial Services has your future in mind.
Welcome back to the second part of the Safe Money and Retirement Show. I was discussing financial literacy, and earlier I talked about an emergency fund, how important that is. Today, over 1 in 4 people have no emergency savings. Without this savings net, some individuals may struggle to cover unexpected expenses, such as medical bills, car repairs, job loss, home repairs. And what does that cause them to do? Get out a loan, put it on your credit card, or borrow from your retirement savings. Borrowing from your retirement savings, I think, is easier if you're retired, because those are IRA accounts that used to be 401k accounts, for example, and you rolled them over to IRAs. You have total control now, and you take a withdrawal or a loan from your retirement accounts. Again, this is not a good thing. How do we prevent that? Well, you have an emergency account. Know the potential expenses going into retirement. It's part of retirement planning. I think many lack a realistic understanding of how much money is needed to cover living expenses and maintain a comfortable lifestyle after they leave the workforce. So let me go back to budgeting that I talked about during the first segment. In your budget should be an amount that's going to your emergency fund. We need to determine a target savings amount. You can calculate it based on estimated upcoming repairs or, let's say, vacations. And I want to make sure you have an understanding of retirement savings options, where to put that emergency money, which typically you're not going to get a rate of return or very little, but possibly a money market that's going to give you 2%. But the key here is you have to have access to that money immediately when needed. Retirement planning. When it comes to retirement, you must understand how to create a plan for enough money for the future, and we need to determine which type of accounts can help achieve retirement income goals. As I mentioned before, a retirement plan is going to include knowing the potential expenses to consider when planning for that income. This will include all sources of income. So, boosting financial literacy, it could be a gradual process, which I think can be achieved at most individuals' pace using a variety of tools and resources. Those who are seeking to expand their financial knowledge and gain additional guidance, managing their finances, working with a financial professional can be invaluable. And yes, that's what I do. Assist you with a wide range of services, which includes planning, saving strategies, retirement preparation, and debt management. And you can also include answering questions, providing insights to improve overall financial literacy. I don't think you can put a value on working with a planner. Experience, knowledge, and education will give that extra that typically you don't get from educational courses, seminars, and reading about financial literacy. From my perspective, it's developing that relationship to where you can call when there's a question and a concern. And I'll give you a good example of a concern. We have received a lot of calls recently where clients are concerned about the volatility of the markets. And they should be. We want our clients to contact us because they are concerned. They're worried. So we can talk to them, explain their exposure, risk, and work with them so they have peace of mind and eliminate that concern. Again, it's that personal contact because you don't want to call a so-called 1-800 number because you don't have an advisor, a planner, or financial professional to answer those concerns about your accounts and how they're affected by market volatility. When you don't have an advisor, I call that a house account. You have a 1-800 number to call. You can talk to an employed individual at the corporate office, and typically they can answer your question, but it's not the same compared to having an advisor that you know, trust, and have developed a relationship with. Again, I don't think you can put a price tag on that. So while we talk about house accounts, if you're one of those that have a house account and you're not working with an advisor, maybe the advisor retired or left the business or moved away, I think that's a situation where you need to have someone that you can have continuous contact whenever you need it and develop a relationship. If you fall into that situation, give me a call. We can talk about where you're at, answer your questions about market volatility, and provide advice. Here's the number, 888-426-0177. Let me give you that number again, 888-426-0177. You can always call the office direct, and that number is 614-861-7055. Heischman Financial Services. I'll share a story with you which may answer some of your questions. Last week, I met with a radio listener. She called. We scheduled a meeting to talk about her concerns and review her accounts as to how much risk those accounts were exposed to. And her first question when we met was, what is safe money? She said she's been listening to my show for over a year now and wanted to know what safe money was when it comes to retirement. And that's a good question because the name of the show is Safe Money and Retirement Show. So I thought I would bring that up for those of you that are wondering the same thing. Safe money is retirement assets that are not exposed to risk and retirement income that is guaranteed for the rest of your life. That's just part of what we do. As independent advisors, we also do investments, and that's actually my son's specialty. He's a stockbroker, registered, all the qualifications, and our clients will have part of their money in safe money strategies. Typically, they will also have money at risk. The question is, how much risk? And that depends on each individual client's risk tolerance. We think it's important to have safe money established first, then invest for maximum potential growth, and later on, an additional income source if needed. And as we always say, everybody's different. So what is the percent of safe money compared to risk? It could be 80-20. It could be 50-50, 70-30, each way. But regardless, it will solve the retirement planning model and strategies for each individual. So I hope that explains where the safe money plays a role in retirement planning. I'm out of time for this morning's show. I wish I had a lot more time because I've got so many good ideas for you, but it's going to have to carry over into future shows. So be sure to tune in next week, same time, same station, for the Safe Money and Retirement Show. I'm your host, Jon Heischman. Thank you for joining me this morning.
The Safe Money and Retirement Show with Jon Heischman Sr. To get in touch with Jon, call 1-888-426-0177. That's 1-888-426-0177. For more information about Heischman Financial Services, visit their website, HeischmanFS.com. That's HeischmanFS.com. Join us again next time for the Safe Money and Retirement Show with Jon Heischman Sr.